Money day, guys and girls. I hope you're blessed. Welcome to another episode of Sunday Setups. Today, hosted by just myself, Lit Capvel. What I want to do is bring you guys some very important information that we do have for the week ahead. And of course, if you guys haven't already been over to the website, be sure to check out our amazing website. It does welcome in all new beginners into Forex, into investing. And of course, if you already have an understanding on trading, but simply want to join a community where it's lit, head over to litcapital.co.uk. Now, with that being said, we do have pretty much a blockbusters week in regards to the last week of June, which is also the last week of the quarter. And what we're actually looking to see from Monday, really, things do start kicking off. We've got the ECB speaking. Now, before I go into the economic calendar, we've got the G7 summit taking place next week. So we're actually going to have a lot of speeches from President Lagarde, from Jerome Powell, from Governor Bailey. You know, that's including the pound, the dollar, the euro. They are going to be moving crazy this week, okay? We've got the GDP on Thursday. We've also got on Friday, okay, some PMI for the German and CPI for the euro. So again, there's going to be a lot of PMI, GDP results. Of course, for those of you who are unaware, the GDP results actually help measure where the economy is, how close we are to going into a recession, or how far we are from going into a recession. So there's going to be some GDP results released, and that's really going to tip the scale in understanding how close or how far we are from a recession. But it does also mean that with so much central bankers speaking, that of course the markets could be showing out a dozen false narratives, or very simply the markets could move sideways. So what I'm going to do is just show you guys exactly what we're looking for. And what I would say is, if before we get into this video, pause the video, go to the like button, go to that subscribe button. You know the vibes, it's lit side, okay? Thank you for you guys' support so far. Usually over 1,000 views per video. It means a lot to us, okay? So I've changed the colors. We're back, new and improved. Lit Cap Part 2, or Lit Cap Point 2, should I say, with the chart. So drop a comment in the section below. Let me know if you guys like my background. But yes, I'm going to start off with the dollar. And because we've got 4 days left of the quarter, it's going to be very hard for us to actually foresee what's going to happen, because there's so much that can potentially happen next week. Initial jobless claims reports will be released next week, and the inflation reports, of course, have been a pressing concern. So there's so much happening that there's the reason for prices to push up as well as for prices to push down. If I'm really honest with you, the strength of the dollar should come down. The reason why I believe it should come down is because that should support the uncontrolled inflation problems that they have. And it should also support the fact that in regards to what Jerome Powell is saying, there is no positive outlook at the moment within the next 6 months that should enable the dollar to merit such strength. So I think the dollar really just has gone for the liquidity grab. If I show you guys on the quarterly chart, we have actually touched into this candle here where we can see prices now push lower. If we don't, of course, then the next candle we're expecting price to react from is up above here. And I think that's really high at 115 for the dollar. I think that's insane. If we manage to get ourselves up there, that is insane. That's all I'm going to say to you. It's a clear case of mass manipulation from the Fed. And I personally believe that they are the only people that's pushing this price up. So if we do get past this area here, it's going to be crazy. It's really going to be crazy, because we're also going to see the stock market make some serious headway to the downside as well. So it's going to be interesting, because of course, regarding the dollar, we do understand that because there are so much things that they're facing right now, there's a lot of reasons why we could get prices push up and prices push down. The unemployment rate, we're going to have NFP taking place, not next week, but the week after. There's going to be a lot of data coming out that's going to actually shake things up. But, you know, it took us a while to reach that 100 mark. Now we've reached it. Price action is very bullish, so we can't ignore it. But we do need to see how this candle closes. And we won't know that, of course, until next week, Friday. So let's wait it out and see exactly what happens. But throughout the week, of course, we're going to be keeping you guys informed and up to date inside of the Discord. I'm going to move on to my next pair. My next pair is going to be AUDUSD. Now, for a long time, I actually saw this swing set up on AU. I actually saw a massive buy swing. And what we're actually seeing happening now is, oh, sorry, that was on AJ. I saw the buy swing, but what we're seeing now in particular with AU is actually that price is making its way down to the lower room, which is going to give us a prime opportunity to go long on this. Now, if AU is to go long, that would mean that the dollar needs to fall. So this is already correlating with my setups that I've got, or my outlook, should I say, or my bias with the dollar, because if the dollar weakens, that's going to give us a stronger AUD USD, right? So I would like to see this push down a bit lower, but one of the two things that I'm going to be very open with you guys and explain is that I'm not really too convinced right now with price action, okay, that price is just going to push up and take out the highs. It's not too convincing. But because there is so much information, so much data to be released next week, anything is possible. Now, you can see up here, I've got an arrow from up here pointing downwards. I would like price to push up and fill this weekly imbalance, okay? That's what I would like. If I wanted to short this, I'd want to short from above. Now, we can see that we haven't quite made a new lower low, okay? But nonetheless, if we push up, I would be looking to see if we could then get a lower low on a smaller time frame. If we go down, however, into the daily and we just go back onto the line graph, some telltale signs is for us to be aware of the fact that we didn't make a new lower low here. Okay, we've pushed up and then we've come down. We haven't made a new low. We've pushed up, we've come back down, and we've failed to make a new low again. So we could also see this market structure shifting here into a bullish route, but we would need price on the daily to close above this high, which is yet to do. So we need to, of course, be aware, of course, on the smaller time frames, we can see some more significant signs that may be able to help us. But we also want to be looking at the bigger time frame direction to understand, of course, what the smaller time frame is going to be doing. So if the weekly is bearish and the daily is bullish, I'm just going to see the daily as I'm going to see the daily as part of. I'm going to see the daily as I'm going to see the daily picture in transitioning to pulling back to falling into the weekly's picture. Okay, so sorry if I made that difficult for you guys there. But nonetheless, now what we can see on the 4-hour time frame is that price has stalled inside of this area, and I do think that these highs above are definitely quite deliciously on the table for the liquidity makers to go up there and grab. So I do think that we can get prices push up. Of course, this trade setup was based off of Friday's price action. We did get price stall inside the session candle, and it pushed down and pushed back up and pushed down, and really it's just consolidated. So, you know, that week has finished. There is an eye candle above on a 1-hour time frame. If prices do come higher, it's not going to be a problem. I am looking to take a short on this. I would like to take a short because I think we could get a sell to buy. But if prices just end up opening up over the weekend and it gaps lower, then I'll be looking at prices pushing back up above, because we can't ignore the fact that we have had a few buys off of this session candle up down here. So I would be expecting price to push up and grab some of the liquidity that's above. This, of course, is all depending on what strength we really have with the dollar. So that's why I say, guys, you have to make sure that you're tuned in with the dollar. And it's going to be a very important week. I mean, look how much news releases we've got for next week. It's incredible, literally. We've got AUD, we've got GBPUSD. Now, we actually have stalled inside of this price action since the whole of last week, if I'm honest. We had a really nice buyout of this session candle, but price has not done anything with it. Okay, price has not moved. It's really just stayed in the same range, which hasn't given us any confidence to believe that we are going to see these higher prices touched. Now, the pound is near an all-time low. So when I look at the price action with the pound, it doesn't significantly provide me with any confidence to believe that we can get prices continuing to push higher. However, because of the dollar's position, we can expect to see a bullish pound if the dollar does come down. So, and the dollar is in a reversal area. So what I'm actually saying to you guys here is, regarding the picture that I have on GU, it's not too clear, and for that I'll be on the sidelines. But what I am also saying is, of course, once the market opens up, we want to make sure that we're taking into consideration the price and the time. And of course, with the news that we have with the pound throughout the week, GDP, PMI, the the governor. The governor Bailey speaking, there's so much macroeconomical data that fundamentally can push this both ways. So it's going to be interesting for us to really see how the markets open up. I do think that this liquidity area above does need to get grabbed. And of course, if I was to sell it, I'd need to sell it from above. So I'm waiting for prices to push up higher. If they can, I'll be looking to take a short from above. But nonetheless, the buy did put us in a tiny bit of profit, but hasn't done nothing with it since. So I'm going to show you guys my last currency pair. Okay, I told you guys on the live streams last week that I'm back with the currency pairs. If you guys are not already aware that we do have a live stream service, which is exclusively available for our Discord channel. To get access, all you simply need to do is head over to the website, litcapital.co.uk. If you're outside the UK, litcapitalacademy.com, and request access to our community. Okay, go onto the packages page and request our community access. That gives you access to 2 live streams a day. Tuesday to Friday, 2 live streams, the London session, the New York session, okay? We also have a free signals group chat where we're providing trades that we're taking. And the trades throughout the last 2 weeks hasn't really been much because the markets haven't really been showing us. And unlike us being like your average signals provider who's sending out trades with 10 pips as a TP or 20 pips, we're trying to really show you guys the palatable moves that can actually enable you to say, you know what, I took 1 or 2 trades this week, but that's made my whole week. It's actually made my whole target percentage that I've been looking to gain. I'm done for the week. You know, those are the positions that we like to get into, and we haven't been able to fish those out over the past 2 weeks. So the positions that we've been sending you guys has been a lot smaller, but nonetheless, you know, it's about the marathon. Okay, this is a business, and it's a percentage-based business. It's not a game. It's not a business based on a numerical number. If we can focus on the longevity of this, then we can focus on the compound effect. So with that being said, with EURAUD, okay, shout out all my AUD traders, EURAUD. With EURAUD, what I'm looking at is to see a push down lower. Okay, we can't ignore the fact that the price action is very bullish. And if prices was to push up higher, here is where I'd be shorting from. So I'm actually going to support the Aussie being a bit, I'm going to support the Euro being a bit stronger this week, given the fact that they've got so much news going on as well. There's a big discussion about all of the G7 summit leaders supporting Ukraine. So I'm probably sure there's going to be some type of news to come out regarding Ukraine or how much money countries are going to be throwing towards the war. But I do want to see higher prices achieved. Now, price action has been really, really choppy over here. But nonetheless, you know, unless prices can push down lower back into this daily candle and we can get a buy from a small time frame imbalance gap fill, if we can get a buy, okay, you can see I've got some imbalance down there to be filled. If we can get a buy from down here at the 70%, I'll take the trade and I'll take it and I'll buy it up past the highs. If we can get a buy lower, now we do have some more imbalance down here, and of course this would take up the liquidity. So if prices do actually end up pushing back down around here, then I'd also again be looking to buy it back up. So it's a 7-to-1 and pretty much a 7.5 to 1 risk to reward ratio. So the reward really is outweighing the risk. We just have to be patient. Okay. I can't ignore the fact that price action does seem bullish. We have now just taken out this high. Okay, so because we've taken out the high now, I'm expecting a higher low. The question is, does the higher low come low enough to tap us into the trade so we can watch this go higher? Maybe this happens, guys. Maybe it doesn't, but this is all part and parcel of having setups and, of course, reacting to how the market plays out to your analysis. So with that being said, I'm going to take you guys into the S&P. Now, the S&P from a fundamental perspective is in a bear's market. It's in a bear's market. There's no investor confidence in the stock market. So there would be probably most likely more downside room to come. Now, a lot of these hedge fund traders, a lot of these analysts at large institutions, JP Morgan, etc., these guys are all calling for a lower S&P. Okay, they're calling for the S&P to continue pushing lower. 3,400 was the target that was called at the start of the year by JP Morgan. Was it 3,400? This is the wrong chart. This is the wrong chart. SPX. Okay, let's have a look. Okay, guys. So yeah. So JP Morgan's actually, sorry, Morgan Stanley, they've called for 3,400 to be touched before the end of the year. Now, earlier on, if I just move this up here, earlier on, they actually did also say they wanted 3,600 to be touched with the S&P, and 3,600 was touched. Now we can see that we're actually not far away from their next target of 3,400. That would be a 12% decline from where we are at the moment. Personally, I'd like to see prices push up in order for us to catch a buy inside of this, excuse me, a buy, a buy. No, I'd like for prices to push up so we can catch a sell from above. Now, with the S&P, we have to be taking our time with things because there is an invested interest in the Fed keeping the stock market afloat or keeping the stock market's attraction in terms of investors having an opportunity to see this as a buying time as opposed to a time to just continue selling. So there is going to be a lot of diversification happening in the markets. Right now, there's a lot of miscorrelation. Usually if gold would push up, the indices would come down. Now you're seeing gold is pushing up at the same time as indices. Crypto is also coming down at the same time as the stock market. So there's a lot of miscorrelations that are taking place at the moment, but that is also giving us more exciting. Okay, it's giving us a lot of exciting opportunities to actually study the price action, see how prices are reacting, and actually make an opinion or form an opinion, should I say, excuse me, based on how price is moving. And I personally think that we are in the best possible position right now to be taking advantage of trades. So this week is going to be a blockbuster. The live streams from the London session to the New York session live streams, it's going to have it all, and there's going to be a lot taking place. So don't miss out this week, guys. It's very important. If you haven't already, head over to the website, litcapital.co.uk. Thank you guys for watching. I know I'm looking in the worst way, but you know the vibes, it's lit side. Have a great day. Always remember, every day is money day. Peace.